Hello and welcome to another TLC tutoring accounting lesson. Today we're going to be going over the basics for accounting for bad debts. Specifically, we'll be looking at the differences between the direct write-off method and the allowance method. Now, when it comes to the direct write-off method, the most important thing to remember is that you are going to be directly writing off that account by expensing it. So let's take a look. I'm going to go down to this box here. So typically what we're doing with these two methods is we're finding out how we are going to be writing off accounts receivable as uncollectible. So when we're writing off an account using the direct write-off method, our focus is going to be on expensing that account right away. So what we're going to do is we're going to debit bad debt expense for whatever amount is being written off as uncollectible. And then remember, we are writing off an account, so we're going to have to decrease accounts receivable, which is an asset, by crediting it. Now, the allowance method is very similar. Regardless of what we're doing, we still need to write off that account receivable, so that account receivable is going to be credited. The debit, however, this is how it differs from the direct write-off method. The debit that we're going to use is something that I like to call a bucket account. And this one that we're going to use is called Allowance for Doubtful Accounts. For whatever amount is being written off. So as you can see here, when we're using the direct write-off method, we expense it. But if we're using the allowance method, we go ahead and take it out of this weird account, Allowance for Doubtful Accounts. Now, this account is actually a contra asset. So it decreases with a debit and increases with a credit. Remember, for contras, those signs are flipped. Now, if this allowance for doubtful accounts decreases with a debit, we're actually decreasing this account whenever we write off an account receivable. Which begs the question, when is allowance for doubtful accounts actually created? And it's actually created at the end of an accounting cycle through an adjusting entry. So at the end of an accounting cycle, what we'll do is we'll take a look at our accounts receivable and our sales, depending on what method we look at, and we will decide an amount that we estimate that we probably aren't going to be collecting. So we have all these accounts receivable, all these amounts that are due from our customers, and we're going to take a look at that and say, I estimate that I'm not going to get so-and-so amount of dollars. So at the end of the period, what we do is we expense that amount that we think we're not going to be getting, and then we put it into that allowance for doubtful accounts account. And effectively what we're doing is we're increasing this account at the end of the accounting cycle, and then next period, as we write off accounts, we decrease that account. And that's why we kind of call it a bucket account every once in a while. So here, allowance for doubtful accounts, the bucket is being filled up. Now, once we actually write off the account, allowance for doubtful accounts is being decreased, it's being used up. So as you start taking a look and getting familiar with accounting for bad debts, there's just one more thing I think you should keep in mind. When you're writing off an account, these amounts are going to automatically be given. So for example, if Joe owes me $20 and Joe declares bankruptcy, I'm going to say, okay, that's uncollectible, then this would just be $20. The amount is pretty clear. These numbers, however, these are estimates. So since they are estimates, we have to use a method to estimate that. And the two methods that you're probably going to be learning in your textbook is the percentage of sales method or the analysis or aging method. So analysis of receivables or aging. So from those two methods, you're going to come up with this number, and it is an estimate. So essentially the allowance method, since we have to estimate this adjusting entry, we're going to have methods within methods. But we'll leave that for a later video. If you'd like to see more examples of accounting for bad debts, a more extensive example, there's a link to an additional bad debt entry video in the description below. If you have any questions, please feel free to let us know. As always, thank you so much for watching. Please be sure to subscribe, and until next time, happy studying.